My name is Amber Russell. I am a partner experience manager with GreenPath Financial Wellness, and we partner closely with Neighborhood Credit Union. So I am here to present to you the workshop Adulting 101, as Charlotte said. Well, there's a lot to learn about being an adult. We're going to focus on some key financial pillars today. So building credit history, getting a full-time job, and living on your own. We'll also wrap up with some tips for long-term financial success that will carry with you throughout adulthood if you start implementing those things now. So let's start out by talking about building credit history. So this is something that will be important to understand and do sooner rather than later. So let's talk about what this means and how to do it. At its core, credit is an agreement between an individual and a creditor, in which the individual receives something now with the understanding they will pay the creditor back later. This can come in a variety of forms, like a loan, a credit card, or a line of credit. Your credit history is a record of how you've managed various forms of credit that have been extended to you. So those credit cards, loans, lines of credit, etc. A credit report shows your credit history and the activity on all open credit accounts, in addition to details about any closed accounts within a certain period of time. This shows how you have handled credit accounts in the past, as well as how you are currently handling credit. Closed accounts can typically stay on your credit report for between 2 and 10 years. And open and active accounts can remain on your credit report indefinitely, as long as they remain in good standing. Your credit score is a 3-digit number that uses information from your credit report to help creditors predict how likely you are to pay them back as agreed, if they choose to extend the credit you are requesting. So basically, creditors use your credit score to measure how risky it is for them to offer you a loan or give you a credit card with a certain available limit. And finally, your credit history. So both your credit report and credit score can be a determining factor in a variety of things, like whether or not new credit will be extended to you and what the terms are, if so. Your credit history can also impact whether or not you are offered or able to keep some jobs. Your credit history can also be a determining factor in being able to rent or buy a home, as well as a variety of other situations. Your credit history impacts way more than just your ability to get a loan, which is why it's important to be aware of and focus on building a strong history sooner rather than later. One way to build credit is a secured card, which requires a cash security deposit to open the account. This security deposit reduces the risk to the lender because if you don't pay your card, they have the money from your deposit to pay. People with no credit history or lower credit scores often must start with a secured card to establish or rebuild their credit history. Deposits are generally low, on average anywhere from $200 to $500, but they can be higher. With a secured card, you are still required to make a monthly payment on time or risk it reporting late to the bureaus. Your deposit is not used to pay for purchases, and you are charged interest on the balance you carry over to the next month. Another credit builder product is a credit builder loan. The loan amount borrowed is held in an account while you make payments. Generally, you can't access the money until you have fully repaid the loan. Essentially, you are building a savings while making payments to increase your credit score. There is no risk to the lender because if you don't make your payments, they have not actually given you any money yet. It is important to make your payments on time or you will see negative reporting to the credit bureaus here as well. A similar product is called a certificate secured loan. If you have money in the bank, you can use it as collateral for the loan, effectively taking a loan against your own money. So the money is frozen until you repay the loan. An example here is having $800 in an account at your bank frozen and you receive an $800 loan. Then you pay $80 for 10 months, and once it's repaid, your $800 deposit is unfrozen. This example here is excluding any interest. If someone you trust has a credit card in their name, they could add you as an authorized user to start building some credit history. Typically, accounts where you are an owner have more impact on your credit. But being added as an authorized user can be a good way to start establishing some history, especially if you're not quite 18 yet. The account owner will want to confirm with the creditor that it will be reported to your credit as well at the time in which they add you. Now, there is some inherent risk in this because if the individual maxes the card out or misses a payment, this can negatively impact your credit as well. But if you trust the person, this can be a good option to start establishing some credit history until you are able to get an account in your name. So we talked about your credit score and how it uses the information on your credit report to calculate a 3-digit number. What info specifically is it looking at to calculate this? So there's 5 main things. Payment history. So are you making all your payments on time every month? So as you see, this is the biggest factor that impacts your credit score. So this is a key thing to prioritize. Even just 1 month of being late on one payment can have a quick and significant negative impact on your credit score. Amounts owed and credit utilization. So when you get a credit card or a line of credit, it comes with a maximum limit, which is the maximum amount of credit you have access to use on that account. Credit utilization looks at how much of that available credit you are using, and the more of it you're using, the more risky it appears to a creditor to extend you more credit. This chunk of your score also looks at the amounts you owe on other loans. And the goal is that, of course, those balances are going down over time. While this section is not weighted quite as heavily as payment history, it's pretty close. So the recommendation here is to keep credit card balances as low as possible. Next is length of credit history. So creditors want to see a history of managing credit over time so they can more confidently assess their risk level by offering you additional credit. The longer your accounts have been open and active, the better. Then we have new credit. You may have heard that inquiries impact your credit score, and this is where that comes into play. Anytime you apply for credit, the creditor typically pulls your credit report to review your history and make their decision. This is known as a hard inquiry, which means on your credit report, it remains on your credit report and impacts your credit score for up to 2 years typically. While of course we all need to apply for credit from time to time, the goal is to be strategic and only apply for new credit when you really need it. Having too many inquiries in a short time can start to be a red flag to creditors who wonder what might be going on. And then finally, credit mix. Diversifying the types of credit you have open and active can help your credit score. So instead of having 2 or 3 credit cards, consider opening a credit card and a loan. Perhaps you even have student loans and maybe even an auto loan. This helps as well. While this is a smaller factor, that's that some, it's still playing a role, and it's important to be aware of. So with this in mind, let's put it all together and talk about how to actually build positive credit history. So as I mentioned, payment history is the largest factor that impacts your credit score. Missing or being late on just one payment can have a quick negative impact on your credit score, and it will take a while to build back from the drop. This is why it's important to make every payment on time every month. If you are concerned about keeping track of due dates, I absolutely recommend setting up automated payments so you make sure your bills are paid on time every month. Consider opening separate checking accounts, one for bills and one for spending. When you get paid, transfer all the money you need to cover your bills to that account, so you are sure the money is there when the automatic payment pulls. We also mentioned credit utilization, or where your credit card balance is compared to the maximum limit. This is the second largest factor that impacts your credit score. Strive to always keep your balance below 30% of the card's maximum limit. And if you can keep it below 10%, ideally, you'll want to pay the card off in full every single month. Pick one specific small budgeted expense to use your card for every month. Something like gas for your car or a subscription service like Netflix. Use that card just for that purpose, keeping the balance low, and then pay the full balance off when you get your statement for the month. This is a great way to build positive payment history while keeping a low balance and avoiding interest if you pay the full statement balance off monthly. Again, most of us are going to need to apply for credit from time to time, which is understood. Be sure to be strategic when you do. However, instead of frequently applying for accounts you do not need, which can negatively impact your score. If you do want to shop around for the best rates on something like a car loan or eventually a mortgage, get all your ducks in a row and apply with multiple lenders in a short period of time to have it count as one hard inquiry instead of multiple. This allows you the opportunity to shop around for the best deal without having more impact to your credit score. Collections can stay on your credit for up to 7 years and can have a quick negative impact on your credit score. Collection accounts can include everything from car insurance that wasn't paid, cell phones, cable equipment that wasn't returned, medical bills that were not paid, rental leases broken early, and more sent to collections and weigh heavily on someone's credit. Some people ignore collection accounts because they think they should not be on there because the bill was paid or it was an error. Taking care of this as soon as you get a past due bill or a notice is so important. Ignoring it because you don't think it's legitimate typically won't make it magically go away, but it can make it much harder to take care of later. Review your credit reports from annualcreditreport.com annually to ensure everything looks correct and that you are aware of everything that is on there. Checking your own credit report and/or score does not impact your score. Reviewing it for educational and monitoring purposes is different from a hard inquiry. It is important to know credit scores are not on your free credit report. You may be familiar with some of the online tools like Credit Karma that offer free credit scores. While these can give you a rough idea of where your score may be at, it is important to take the score provided with a grain of salt, as it is typically not the most accurate, up-to-date information. If you were to go to credit union or bank and apply for credit, there's a good chance the score they pull will be different than what you see on Credit Karma. And finally, did we mention making every payment on time every month? This is worth repeating because it really makes a huge difference when it comes to your credit. All right, so we're going to switch gears here a little bit and talk about full-time jobs. Landing a full-time job can be really exciting, as your paychecks will typically be quite a bit larger than what you may have been paid for a part time job while still in school. The total amount of money you earn is what is called your gross pay. This can either be a salary, which is when you are told you will be paid a flat amount of money per week for the amount of time you're expected to work, or an hourly rate, which is typically multiplied by the exact number of hours you work in a week and can fluctuate a little as the exact amount of time you work may vary. Your net pay, however, is the amount of money you actually receive on payday after deductions are subtracted from your gross pay amount. This net amount will be noticeably less than your gross pay, and it can catch people off guard at first if they don't know what to expect. Those deductions include things like taxes, local, state, and federal, as well as Social Security and Medicare taxes, as well as the cost of optional benefits your employer may offer you. There's no guaranteed calculation to use to determine how much less your net pay will be than your gross, as deductions and taxes can vary. So it's important to be cautious about your new income until you've started seeing paychecks to know what your actual take-home pay will be. While benefits vary by employer, they commonly include things like health, dental, and vision insurance, potentially flexible spending or health savings accounts, additional insurances, and retirement plans. Flexible spending and health savings accounts may allow you to contribute money from each paycheck before taxes to help cover specific expenses. These expenses are specified by the type of account, but may include transportation, medical, or childcare expenses. There are a lot of rules related to these accounts, and eligibility for health savings accounts typically requires enrollment in a high deductible health insurance plan. While they can be a great benefit, be sure to understand how and when to use the funds you contribute if you open any flexible spending or health savings accounts. We'll talk a little more about the importance of starting to save for retirement as early as possible later on in this presentation. Some of these benefits may be free to you because your employer pays for them. Some of the employers split the cost with you, and some are offered through your employer, but you pay the full cost. Again, the cost of any benefits you are responsible for paying will be deducted from your gross income before you receive your net income on payday. If you are currently on your parents' or guardian's insurance, be sure to check in with them about how long that coverage will continue so you can make benefit elections with this in mind. It can be really exciting to get your first job offer. Before making financial commitments, renting a new place, taking out a loan to purchase a new car, anything like this, wait until you get your first paycheck to find out how much money your paychecks will actually be. It's also important to know when the benefits you choose to sign up for will start. There is sometimes a waiting period when you start a new job. If this is the case, you will need to calculate how much you will be paying towards benefits when they do kick in and subtract that amount from your initial net pay to estimate your take-home pay long term. This will be the number you'll want to use when considering affordability of taking on new financial obligations. If you are offered an hourly position and those hours might fluctuate, base your financial decisions on the amount of take-home pay you know you're guaranteed to earn. For example, if you're offered a job with 35 to 45 hours a week, use the take-home pay for 35 hours a week. When you work more than that, great. That's extra money to put towards financial goals and savings. You can confidently know, however, that your needs will be met even when you work the lower end of that hours range when you base your budget on it. The same thing goes for overtime. Even if you are told you can expect to be eligible for regular overtime, consider that extra money to put towards financial goals and base your actual budget on your guaranteed income. Next up, let's talk about moving out and living on your own. Whether you plan to truly live on your own or plan to have a roommate, here are a few steps to take in advance to set yourself up. When you are ready to start thinking about moving out, first determine a realistic timeline. If you don't have any money saved up and need to work on your credit, it's important to know it may be a minimum of 6 months before you'll be realistically able to think about moving out on your own. If you are in a situation where you really need to move out sooner for some reason or another, investigate what community resources may be available to help you expedite that process. In general, though, start taking steps to prepare to move out at least 3 months in advance, if not longer. Speaking of your credit, it will be important to know where you stand before starting to apply for places, as your credit score is typically a determining factor in whether your rental application will be approved or not. So review your credit report in detail from all three credit bureaus, which can be done for free at thatannualcreditreport.com. Ensure everything reporting is accurate and that you were aware of everything that is on there. If something is inaccurate, file a dispute with the credit bureaus as soon as possible to work on getting that resolved. If you have outstanding old bills and collections, especially if they are for old rental leases or utilities, come up with a plan to get those paid and resolved. Landlords will not want to see outstanding balances owed to a previous landlord, and same thing with utilities. It takes time to build credit or to get inaccuracies resolved, so the sooner you can start working on this in preparation to move out, the better. If you are moving out on your own for the very first time, you may need to purchase quite a few items. Make a list of everything you will need to be able to live on your own: bedding, curtains, and rugs, kitchen utensils, appliances, dishes, trash cans, furniture, electronics, and anything else you may need. Consider what items you must have before your first night in a place of your own, and what items you'd like to have eventually, but they could wait. If you have room to store items before moving, start looking for deals and sales on the items you know you'll need. Frequent thrift stores, Facebook Marketplace, and neighborhood buy nothing groups, and other secondhand options in your area. If you don't have space to start buying items slowly ahead of time, prioritize saving money to buy items you'll need once you get your keys. It is also important to do some research on rental prices and landlords in your area. How much can you expect to spend on rent in the neighborhood you'd like to move to? What landlords, housing complexes, and property managers have good reputations in that area? And perhaps even more importantly, which might you want to avoid? What is the average rental length in the area? And can you commit to staying in one place for at least that long? There are often steep penalties and fees for breaking a lease early, so you want to do your research to understand this before signing an agreement. So once you've done some research, determine how much you can comfortably afford to pay in rent with your other expenses. It's recommended to keep your rent payment below 30% of your monthly gross income. But it's important to know what works for you based on your other expenses and goals. Start putting the amount of money you expect to be a future rent payment into savings every single month. Not only does this allow you to start getting used to not having those funds to spend on other things to make sure you can truly afford that payment, but this also helps you build up a savings cushion before moving out. Speaking of moving out, typically requires a variety of upfront expenses. You'll typically have to put down a security deposit that is often equivalent to 1 month's rent, plus your first month's rent. And in some cases, you may be required to put down your last month's rent too. This could mean you may be expected to pay 3 months worth of rent at once to be able to move in. Start saving aggressively to ensure you have the money you need to secure a place, in addition to moving expenses and purchasing the items you'll need for your new place, like we just talked about. So life happens. Many times it is things out of our control. Having a place of your own is a big responsibility, and it's important to have a plan to keep a roof over your head, even if something changes in your financial situation unexpectedly. If something changes with your income or you suddenly have large unexpected expenses to cover, remember to treat your rent as your top most important financial priority. If you cannot make your payments on time or cannot make your full payment, communicate with your landlord as soon as you know this to find out if you have any options available to you. The sooner you can start the conversation, the better. If at all possible, do not wait until after your rent is already past due. The eviction process can begin as soon as 1 month past due in some places, so being proactive is key if you know there's no way you'll be able to make your rent payment. If you have savings, this would be a prime time to dig into it. Consider what other items of value you have that could potentially be sold to create cash flow to put towards your rent as well. Can you pick up extra hours at work or earn some extra money through a side hustle? Get creative here to think about ways to bring in cash to put towards your rent. In some situations, there may be community resources available that potentially have financial assistance available to help with rent. Contact your local 211 hotline to inquire about rental assistance in your community if you've exhausted all the other options. We've barely scratched the surface when it comes to things you need to know to fully adult, but we want to wrap up with a few more tips for financial success. First, we've alluded to it throughout our time so far, but the number one biggest tip we can give you for long-term financial success is to create a budget and use it. Quite simply, your budget is your way to know how much money you have coming in and what all you need and want it to go towards. Your budget is your plan to reach your financial goals. So as you start to adult and take on more and more financial responsibilities, your budget will likely change. The sooner you start getting in the habit of using a budget, the easier it will be to continue using as your financial situation changes. To create a budget, list all your income, the amount of money you know you have coming in to work with, then list all your expenses, your bills, groceries, gas, entertainment, everything you spend money on. Don't forget to build savings into your budget as well. List your expenses in order of priority and then split up the money you have coming in to determine how much you'll spend on each expense every month. Then keep track of your spending to ensure you're staying within your budget. Consider downloading an app that you can sync to your account to track this for you automatically. If you need to adjust, be sure to move money from lower priority expense categories to make sure all your highest priorities like rent, basic needs, bills, things like this are fully covered. A budget can be kind of a negative word, and a lot of people associate it with going bare bones and doing nothing fun. This does not have to be the case. Again, your budget is simply your plan of how much you have to work with and where you need and want those dollars to go. It's up to you to determine a plan that works for you long term. Speaking of, the sooner you start treating savings as a top financial priority, the better. Get in the habit of paying your future self first by putting money into savings every time you get paid. I recommend setting this up as an automatic transfer so you don't have to go in and actually initiate the move yourself. Think about financial goals you'd like to save for, both short-term and long-term, as long as general savings for things like emergencies, as well as general savings for things like emergencies. Consider savings a priority expense when you're building your budget, and adjust the amount you save as your income grows and your goals change. Drilling a bit deeper into this, start thinking long-term as soon as possible. And what do I mean by this? It's never too early to start saving for retirement. In fact, the numbers are staggering how much more money you'll have when you're ready to retire if you start putting money away early and giving it more time to compound. While retirement may feel like literally forever, 40 plus years away, 40 years may be more than twice as long as you've been alive. Starting to save for retirement as soon as you start working full time is something you will absolutely not regret when retirement does roll around. So when you start a full-time job, it may be tempting to skip over starting to make contributions to your retirement plan. We encourage you to start saving for retirement as soon as you start working full-time. Many employers offer to match what you save for retirement up to a certain amount. If this is part of your employer's benefit package, we strongly encourage you to prioritizing taking full advantage of this so you are not leaving money on the table. Another tip for long-term financial success is to get good advice. There are a lot of places to turn for financial advice and education, so make sure you are turning to a trusted resource. Especially with the internet and social media, more people than ever have a platform to give advice that may or may not be true, or may not make sense for everyone depending on the specifics of their financial situation and goals. Your financial institution, neighborhood credit union is a trusted place to start when it comes to learning about finances. Find out what resources they have to learn more about topics you are interested in or want to better understand. Many financial institutions have a full suite of financial education options so you can get trusted information in a way that resonates with your learning style. And finally, the last tip I have for you today. If you ever find yourself struggling with your finances, reach out for help. A big part of learning how to adult is learning that life happens, and a lot of times those life things are out of your control. If you are ever worried you won't be able to pay any of your bills, reach out as soon as possible to determine what options you may have available and prioritize doing this before you fall behind, if at all possible. Being proactive is key. The people you owe can't help if they don't know what's going on. So if you find yourself struggling, don't be afraid to reach out and see what options you may have. The sooner you can explore your options and come up with a plan, the better. You also do not have to do this alone. You can reach out to Neighborhood Credit Union for support or to GreenPath. So at GreenPath, our certified counselors can conduct a free, confidential financial assessment with you. This involves taking a look at your budget with you and collaborating to develop an action plan to help you work towards resolving your financial concerns or reaching your financial goals. We can also talk about other financial concerns or goals you have related to things like credit, housing, student loans, or debt. GreenPath also provides a couple of worksheets and guides that may be helpful to get started, budgeting worksheets and aligning priorities workbook. Neighborhood Credit Union will share these with all registrants for this webinar, or you can find them at greenpath.com/neighborhood credit union, which is on the screen now at the bottom. Another course that may be relevant to our topic today is Aligning Priorities digital course. We just saw the workbook, but this may help you decide whether expenses are more important to be able to get on track with a budget. So this is going to help you prioritize those expenses. You can scan the QR code now, or you can access Learning Lab Plus at that greenpath.com/neighborhood credit union. We also have a recorded webinar that was recorded last month that you may want to check out. It's Emotionally Healthy Spending. You can scan the QR code now. You can learn more about the webinar and you can decide if it's the right fit for your needs. And lastly, remember, you are not alone. You can contact GreenPath at 877-337-3399 or learn more at that greenpath.com/neighborhood credit union. Thank you everyone for joining us today, and I hope you have a great rest of your day.